Buongiorno and buonanotte. Welcome to a quick and short live stream. I haven't done some streams in a while, but I'm doing one now. And the topic today is talking about investment strategy for 2020. So, I'm not a fortune teller. I can't tell you, this is the first sure thing to do. You should invest in this. You should invest in that. Um, that's not what I'm here to do. What I am here to do is to share with you my thoughts in terms of investing in 2020. So, you notice I haven't made any videos in a while talking about the market, and that is because I'm currently in a holding pattern. I made my move, was very successful, and now I'm in a holding pattern. So basically, you guys remember, just for catch you up if you haven't been watching the previous videos. So I was waiting. I don't know. It's again probably in 2 years by now, waiting for a crash. We're overdue for a crash. So I kind of been on the sideline. CKK. Oh, what's going on, man? Investment strategy, buy the dip. Absolutely. So I've been on the sidelines waiting for the crash, and so I pulled all my money out of the market. And then early this year, I started seeing, the pandemic situation, and I saw what was happening in China. They had millions of people in quarantine. So at that point in time, a lot of people weren't taking it seriously. But my major red flag was when I saw that millions of people were in quarantine in communist China. Right? I mean, to quarantine millions of people like that is devastating. In terms of from the economical standpoint. So to make that kind of decision, especially from a dishonest type of communist government, things must have been pretty bad. So that was my first major red flag. And when I saw the stock market starting to go down, I said, now is the time to jump in. So I opened up my account with Chase, JP Morgan, and I made my first trade as soon as everything was clear, and I bought in just before the very bottom. So I made my predictions on where the bottom was going to be, and I bought in at a really good point. I actually did really well within the first week. So most people were suffering and their portfolios were way down, and I was actually seeing returns already. Small returns, but already seeing returns. So I held on to that, went to the bottom, then things started recovering, things started going back up, and fast forward to now, we are June 28th. I am up, I think, 28% or more than that. Wishing I'd invested more than I did, but work comes first. I am. This is just my, I don't know what you want to call it, side project, because you can't really make a lot of money investing unless you really put down a lot of money. You got to be putting down 100 grand, 200 grand, million or more to really make some significant gains. So I look at it as a way just to get a higher return on your money in terms of you get a high interest savings account, you make 2% on it. Used to, right? Now even that's like really low. Investing in the stock market, I could get a 5%, a 10%, or a once in a decade opportunity. You have a major crash like this, 30% in just a few months. So that's pretty awesome. But the question is, what happens going forward? What's going on? What do I anticipate to happen? So like I said, I'm in a holding pattern. So I already made my nice returns. I'm happy with those returns. But right now I am in the long-term run. I'm locked in. I got I'm buckled in. You know what I mean? Like I'm secured. I'm secured in terms of long-term, minimum 1 year. My sort of timeline when I started this was 4 years because I was very pessimistic in terms of where I think things are going. I like to keep the emotion out of it. I'm just looking at the data, doing my analysis, and a little bit of sort of I don't know, just it's a feeling, right? Because you can't predict exactly what's going to happen. I don't know what the future holds. We could have not known that there was going to be a major pandemic this year. Now, knowing that a crash was coming, we don't know when it was going to come. Knowing a crash was going to come, that's something that you can have a high sort of confidence in. That's the way the market works, right? You have a major crash, then there's a recovery. Hopefully it doesn't take too long, and then the market goes up and up and up over time, and then you have a period of time where it's been going up for too long, so something happens that reverses the market, and there's your crash again, and then rinse repeat, right? But in terms of when it's going to happen, how it's going to happen, can't know. How bad are things going to be? Can't really know. But the same way that I knew to anticipate this crash and took advantage of this crash, I mean, I isolated myself from it where I was outside of the market, jumped back in just before it bottoms out, using that same kind of not I know the future, but just analysis, looking at historical patterns and making a prediction for the future. So, with that being said, and unfortunately, um, here's the bottom line. So we're either gonna go recession or depression. It's either recession or depression. Click on the like button. Appreciate the support. Recession or depression. So I'm leaning a little bit more towards the depression side. I'll explain my thoughts on that, but I'm leaning a little bit more towards depression. I'm not 100% sold on that, but I'm very pessimistic right now. What's happening right now is devastating, and I don't think people truly understand the gravity of what's happening right now. Because, for example, and I hate this with corporate media, there's a lot of talk about the unemployment being massively high, but I'm going to tell you right now, unemployment hasn't started yet. Now, that's not to say it's going to get higher. It's actually going to be a lot lower than it is, but it's still going to be devastating. Um, that 40 million number, that's not really unemployment, right? Um, it, it's a really basic concept, but I guess corporate media, I have to put a lot of blame on them for sort of misleading people. The real unemployment starts now. The 40 million, that's quarantine. Quarantine is not unemployment. Quarantine is you shut down an entire city like New York City, right? You have all these non-essential businesses completely shut down. They have no revenue coming in. These businesses are put on hold. If you have no revenue coming in, and unfortunately not in a country like Germany or other countries that really took care of their workers, right? They actually stepped in to take care of the workers, to keep the workers employed. So I think their unemployment was at 5% or something. And I don't know where the numbers are, but their unemployment right now is not a big deal. It's not good. It's certainly higher than it was, but it's not a big deal. Unlike here, it's catastrophic because our government really didn't step in the way some other countries have. So the bottom line is you pause the businesses, you don't have any money coming in, so you can't pay your workers. So you got to get rid of them, right? You got to put them on a furlough or something like that. That's not unemployment. Yes, technically, if you're not working, you're unemployed, and you count all the people that are not working, that's a total unemployment. You do a ratio, I get it, but it's temporary, right? I'm not so concerned about the temporary. Now, I'm not trying to diminish how serious that is. I mean, having 40 million people not working is very bad. How do you pay your mortgages? How do you pay your rent? I get it. People could already been in a very delicate situation. Also, small businesses as well. And this could be the final thing to push them off the edge. A lot of businesses have closed permanently. Smaller businesses have closed permanently because of this. I get that. I get it. But again, temporary. And then you have the government that they did step in on some level because they have the Paycheck Protection Program, they have the coronavirus stimulus check and things like that. So that allowed people to be able to um, pay their rent and sort of push them a little bit more, right? But this is really a pause. So what's real unemployment? Unemployment starts after recovery. First wave is when companies reopen, they're not going to bring back everyone, right? The economy's not looking good right now. We have a rough road ahead. A lot of people are afraid of the coronavirus, as they should be, right? So, if you're in a restaurant business, you're in a retail business, your business is going to drop significantly, right? So when you reopen, anyone with any sense, they're gonna sort of trim their staff, right? So let's say you only bring back on 80%. or 70% of your employees. That's the first wave of actual unemployment. That's not a pause. That's not a furlough. That is, we don't need you anymore, right? Now, if the economy magically, recovers, out of the blue, just like our genius in chief wants to believe, then business ramps back up. We have a vaccine for the coronavirus, and then they're like, whoa, we need more people, so we got to bring people back. I don't think that's going to happen. I think whoever doesn't get their jobs back when companies reopen, you are out of luck, right? You need to find something else. And unfortunately, there's tons of other people from other companies, other industries, who are in the same boat as you, and you guys have got to duke it out for whatever jobs are left, right? Not a good situation, but that's only phase one, right? Phase two, I would anticipate any business. Again, you're a major corporation. You didn't get there by being an idiot. So you're going to do some level of risk analysis, right? So I'm pretty sure a lot of businesses have already discussed, behind closed doors, I'm sure, upper level management, a plan of, first of all, how much of our staff are we going to bring back when we reopen? That's unemployment phase one. Unemployment phase two comes from another discussion that I'm sure is happening all over the country behind closed doors with the executive staff. So the next conversation is, okay, this is unprecedented. Things look really bad. We see a lot of concerns about where things are headed in the economy. So we start with the 80% of the staff, and then we have an analysis period of time. So it's kind of like a, what's the word I'm looking for? It's kind of like a trial, right? When businesses reopen, they're probably going to do some kind of trial system, which has a timeline, let's say 3 months, for example. So for the next 3 months, we are going to do an analysis of business, right? How much business do we have coming in the next few months, right? Because this is unprecedented, this is crazy, it's drastic, so you don't have a lot of data to fall back on in terms of, let's look at what happened in the past, and then we make our predictions based on that. It's a lot of unknowns. So the only way to know for sure how bad things are really going to be is to just go out there and do it. Meaning, open your doors, try to predict the right amount of staff that you're going to need, anticipating a lower level of business as accurately as you can. Don't go under too much to where you're understaffed. Don't go too high to where you have a lot of extra people working and you're not making a lot of money, and then you got to pay all these people. So you might want to start a little bit under, perhaps, depending on the type of business, right? And then you watch things for the next few months, maybe 2 months, whatever it is. They're going to figure out the timeline. You look at the money coming in. You look at the trends. As things are opening up, we started out really low, but week after week, we see a slow trend, a 2% increase per week, whatever it is. From that, we extrapolate where things are headed long term. And that's where the second wave of unemployment comes in. If 3 months from now, they find out that the 80% of the staff was perhaps too much, business is lighter than they expected, maybe they did expect it to be light, but they expected the return to be more significant. They expected, in the first month it'll be slow, but then the next month, as we go further in time, things will slowly start to creep back. More and more people get comfortable. The money starts coming in. But if they were wrong on that and things are stagnant or worse, they sort of, things are worse than they expected. The money coming in is really low. Then maybe you need to cut another 10%, right? Some businesses, maybe it's time to file for bankruptcy. Now, some businesses have already done that. You have major corporations already filed for bankruptcy. There's going to be more. And that is another phase of the actual unemployment. Companies that were not doing so well before the pandemic, and they were playing games with loans and borrowing and all this kind of stuff, highly leveraged. This crisis would have unveiled the reality of these businesses, and many of them, they already saw the writing on the wall before this, and then during this they're like, yeah, we don't have the cash on hand, we can't, this is not going to work, we need to pull out now before things get really bad, right? So they already filed for bankruptcies. There's gonna be more. I think Hertz Rentals, another one coming. You're gonna see some major companies, major names that have been around for a long time that are gonna be shutting their doors. There's gonna be sharks that are going to also be. So I'm looking at this as well in terms of acquisitions. This is a prime opportunity. If your balance sheet looks really good, if you've been really smart in your investments and how you've spent money, um, there's going to be certain players that are really in a good position financially. This situation, the demise of all these other corporations and people and all this negativity, can actually be a great opportunity for certain corporations. Similar to the way it has been a financial opportunity for me, investment wise, in terms of when the market crashed, I was able to get in really cheap and get that 30% return within a few months. That was tremendous. Now, that's on a small scale. If you're a corporation, when you're dealing in millions of dollars, hundreds of millions, maybe even billions of dollars, um, imagine instead of buying some stocks like I did when things were low, imagine acquiring entire companies, right? So you have another company that has a great product, which is very profitable and very popular, but they they're not in a good way, right? They got a lot of outstanding debt, and um, maybe their business is really affected by what's happening in the economy right now. So they're really struggling, and they're about to go bankrupt. You can snatch up those companies, right, for really attractive prices. Again, if you're a big major corporation and you got the pockets, you can snatch up a very valuable corporation that's struggling. Now, they're struggling because their business is affected by what's happening right now. So if you acquire this business, chances are it's not going to be profitable for you. But if you're big enough, you can take that hit as a long-term investment. Or, and I get it's just kind of it's kind of it's a little sad to think about, but I mean it's the nature of business. Maybe you just want their technology, right? If you have the right company which has the right technology that's doing really bad, their balance sheets aren't looking very good at all. They're on their last breath. They are not going to make it. You can jump in there and arrange a sort of deal where you're able to extract certain technology from them. So, I mean, this is not my specialty, but some kind of acquisition where you sort of either acquire a business just specifically for the technology, which means you're going to massively lay off their staff. You're going to dump a lot of other parts of the business that you're not interested in just so you can get that technology. I'll give you an example. Let's say that your company is a video editing. If you didn't take advantage of the crash and jump in when prices are low, unfortunately, in my opinion, you missed it. You missed the boat. You missed a great opportunity to make a lot of profits pretty quickly. Um, Going forward, I would buckle in and go long. If you're willing to wait from 1 to 4 years, then you know that's a kind of way I would look at it, because the market's already so much higher than when it crashed that it's certainly got some room to drop back down a bit. And again, there's going to be phases of events throughout the year that, I mean, we already had some bad days in the last few weeks, right? There's going to be more of that, probably more of a drop than we've seen. But bottom line is, I would be prepared for a very rocky road ahead, a very long, um, maybe at some point in time we'll have a very stagnant period of time where the market doesn't really, if you look at the long-term trends, it's not really going anywhere. I mean, in short term, you may see, oh, it's been, this was a good week, and that was a good week, and this was a good week, but then there's a major dip, and then it dips again, and then this was a good week, and this is a good week, So in the moment, it'll feel like, okay, we're back, and then no, we're going back down, and then, but if you look at the long-term trends, it might be relatively flat, or just sort of anemic, sort of movements. That's my expectations anyway. I'm not expecting any kind of vigorous return. We've already seen that, right? Prices were so low, and it came back up pretty quickly. So we've seen that already. So I think all the spunk and the energy, I feel is mostly washed up. Now, might there be some short term? I mean, they would, like I just described, right? There may be some short term, a few weeks of really good, things. Like let's say there's a vaccine that I mean, there's already a vaccine that looks like it has really promising, but if we got some really additional promising news about the vaccine, um, and then it's like that good news, and then some other good news that could lead to a really good few weeks. Um, but to me, very risky, because again, it's going to be an up and down, up and down, up and down. That's what I anticipate. I can't predict the future, right? I don't know what's going to happen, but that's where my mind is at in terms of investing. So opportunities for me would be finding some kind of company product that you know a lot about, so you're really into video games, and there's a new video game company or a new type of video game or something like that, something that you know a lot about, and you feel like these guys really know what they're doing, and this is going to be the next big thing. And their stock price per share is like really low, so it's $5 per share, $10 per share, something like that, meaning you can afford to purchase a lot of shares of it. Um, Something like that, you could have a great return in the long term, 1 year to 4 years. Imagine seeing a $2,000 investment being worth $6,000 in 4 years or something like that. However, because we're headed for some really rough times, the risk there is in, again, we said bankruptcies, right? So the the higher the potential return, the higher the risks, right? So that kind of scenario where you buy um, a lot of shares of a company that's pretty cheap, and it's a large percentage of your portfolio, that has a huge potential for return in the next 1 to 4 years, because again, you purchase a lot of shares. We already been through some really bad times, so you can anticipate that we will be getting better in the future. The bad and the negative that I'm talking about is the long term, like being stagnant and negative news. Um, but it's not in terms of the market dropping really low or something like that. It's just not a lot of growth and things just not being very positive. So therefore, you don't buy a stock for $150 a share, and then you watch it go to 160, the kind of stuff that was happening before. But if you wait long enough, in 4 years, by that time, hopefully we've gotten through the worst of it, and we've gotten on a positive trend for long enough that people feel more positive, and then the market starts recovering. And instead of just a few months of good times, we have 6 months, 7 months, 8 months of generally upward movement. Then at that point in time, that's when you're good. However, between now and then, a lot of companies that are around now won't be around. So if you're banking on a newer company, obviously, a lot of businesses, most businesses don't survive. They don't make it, right? It's the few that really make it. So with that being a standard thing, coupled with a potential recession or even worse, depression, now you got even more odds stacked against the success of new companies. So you have to be ready for that company to go out of business, to watch your investment to completely collapse, right? So the smart move would be to stick around with ETFs and things like that, where you sort of tether yourself to the market. That's mostly what I'm doing right now. So I already bought so low that I can weather all kinds of downtimes. It's not really going to affect me. Um, but I already made my 30%. I'm not going to have much opportunities for a lot of aggressive returns anytime soon, unless I make a move like what I suggested. But again, that move comes with a very high risk. If again, you want to be really balanced right now, because a lot of companies are not going to make it. So if you tether yourself to individual corporations and you're not diversified enough, then you risk being pulled down if you pick the wrong sort of players. So I wish I could give you guys more good news, and I could be completely wrong, right? I can't see the future, but I'm very very reserved and pessimistic right now. Again, 1 year to 4 year window, um, and those are my thoughts. That's the only thing. That's the only thing I can think of. Tether yourself to the market, go long. If you have the cash to spare and you're willing to risk losing a majority of your investment, if not all, again, try to find some cheap stocks that you can get a lot of shares of, and therefore, if between now and the next 4 years, you see $10 per share, gain, or $20 per share gain, and you got 1,000 shares, do the math, right? So, so that's it. So, unfortunately, in my opinion, the party's really over, and this is time for long term, guys. Long term investments, 1 to 4 years. Short term, if you're really sophisticated, if you really have that amount of extra cash to risk, you just won the lottery, you got $10 million in the bank account, and you want to play around with $1 million, 1 million out of 10, you could lose it all and you still got your 9 million. Absolutely, go nuts, do your thing. But you know, for most of us, and again, you got to consider, with us heading into rough times, an investment portfolio can, except for your retirement, of course, can become kind of a luxury, right? Because we get into really hard times where you're going to have a potential financial struggle. Um, Having your money tied up, too much of your money tied up into the stock market, not a good, good look, right? Because if you end up needing the cash, right, and then your stocks are down 50%, 30%, and then you got to pull that out. I mean, oh my goodness, that's going to be brutal, right? Now is not the time to be locking up too much of your cash into investments. So this needs to be, whatever you're putting into the stock market needs to be, I mean, I always tell you guys, don't invest more than you're willing to lose. That's always my policy. Never invest more than you're willing to lose. But especially now, when you have a definite, there's something very, very clear and specific danger in terms of economic hard times. This is absolutely not the time to be tying up cash into something where you can see the value of that cash severely diminish, and very, very quickly. So this is only time for smaller investments that you're willing to lose. Otherwise, again, I would say tether yourself to the market. It's a little bit late for that because, again, the market's very high. But if you really want to invest, probably want to go ETFs, right? Probably want to be a little bit more diversified. But the idea of like picking stocks, I'm gonna get that and I'm gonna get this, unless you're willing to wait 4 years, and unless you're willing to risk really losing, in terms of, again, you invest in companies that go out of business, right? So those are my thoughts. Comment below, let me know your thoughts. What you guys are doing, what your plans are for 2020. I would say another way to look at it is real estate. Might be some big opportunities coming up with that. I myself am invested in real estate. Um, Unfortunately, the timing of that is didn't really go with what's happening now, but it doesn't really affect me that much because I'm a holder, right? When it comes to real estate, I don't really care about appreciation. I mean, Of course, I care about appreciation, but that's not my focus or priority. So I'm expecting the value of the property to go down in time. I think the real estate market is going to fall behind the rest of what's happening now, because right now I think some prices are still actually going up potentially. We haven't really seen, I don't think, major decreases in values of real estate right now. Not that last time I checked anyway, but I do anticipate at some point in time that will happen, because um, a lot of people are hurting. So people are going to start defaulting on their mortgages. I know that's already started happening, right? Um, the more people default on their mortgages, the harder it's going to be. You know, it's headed to a pattern where we're going to possibly see the prices of houses go down. But one thing that's probably not going to go down too much, and depends on the market, right, is rent, and that's all I care about. Rental income. So the price of the house goes down by 5%, 10%, 20%. Doesn't matter, because I don't plan to sell anytime soon. So if you're in that position, great. If you're looking to get into investing in real estate, there may be some great opportunities, and you have the cash. Again, be very, very careful about how you're spending your cash right now. But if you got the cash and you're looking for a better investment, perhaps than investing in the stock market, there might be a golden opportunity with real estate. If you see housing prices start plummeting, and you time it the same way I timed with the crash that happened this year, you time things adequately to where the prices, I mean, as the prices go down, there's going to be other people that are going to be thinking about, like, oh, let me snap up these like really cheap houses. And it's going to get to a point where um, if you don't time it right, then it'll be tough for you, because again, you're bidding against other people, right? So you got to time it correctly. But you might be able to get houses at a really low price, and if you have the right time horizon, maybe there'd be an flipping opportunity. I'm not a big flipper, that's not my thing. But if that's what you're into, there may be opportunities for that. uh, the opportunity that I would look for, and I will be looking for, would be an opportunity to get a sort of a double benefit. So, buying property when the values have dropped significantly, right? When there's not a lot of competition, other people are strapped for cash. I've got the cash, jump in and buy something, significantly undervalued, and have that be a source of rental income. And then the double benefit is, even though I'm holding it long term for rental income, the fact that it's the value is really low means that within a short period of time, I could build up a lot of potential equity, and that's a great situation to be in. You got a lot of money coming in from rental income, and you also have an asset that has a significant equity. So maybe the value of the home increases by $50,000, right? So now you've got $50,000 worth of equity plus whatever the down payment you put on the property. Um, so that's a really good position to be in. Maybe you can leverage that, and at some point in time, you do a home equity loan and then invest in another property. If things are still low and you feel the market has a lot of, much more improvement to go, then you could buy yet another property, right? Through the home equity loan. So a lot of potential opportunities there, but be very, very, very careful. Be very careful. All right, guys. Thank you for the likes and your comments and the support. CKKO, good to see you. And until the next episode, everyone be well, be safe, wear your masks. And I guess on a final note, if you're currently unemployed and you're making, I mean, if you're watching this channel, you're probably doing good financially. But just in case, maybe you're younger, you're just starting out. If you're making more money with unemployment than you were making with your job that you had before, on one hand, I appreciate the idea of you've got a lot more cash coming in, so maybe you can pay off some debt. I'm all for paying off your debt. Right now, my credit cards are all zero balances, right? I'm all about being debt free, and I have been debt free. Right now, I just acquired a lot of real estate debt, but that's the good kind of debt. But still, it is debt, no doubt, and I like to be debt free or as close to debt free as possible. Net positive is the way that I like to be. But um, problem with that is whatever gains that you can get from making more money with unemployment, you risk. There's a high risk, in my opinion, of you losing it all and ending up in a very, very catastrophic position. Um, Potentially, what you're looking at is taking advantage of the unemployment right now, getting ahead financially, paying off some of your debt, maybe even getting a little money saved in the bank. That is good, right? But the cost is high. It's kind of a deal with the devil. And what I'm talking about is that unemployment is going to run out at some point in time. And between now and then, remember what I said, there's multiple phases of the actual unemployment coming. You don't want to be in 6 months or 10 months, most likely, depending how things work out. If things head anywhere near depression, you don't want to be anywhere near looking for jobs at that point. Because think about going ahead, being ahead financially for now. Then unemployment runs out, and by that time, a ton of people have entered the job market and they're desperate, right? Money is dried up, there's no more unemployment, there's no stimulus checks. Now you are looking better than you were before you were unemployed, right? Because you made that extra money because of the stimulus and all that kind of stuff. But now you can't find any work because you're competing with so many people. Salaries are also lower because there's so many people on the job market, right? So if you can even find a job, the money's less. So what can end up happening is all the money you saved up, all the gains that you got from taking advantage of this unemployment, the extra money, you can lose it all. You can lose all that money that you saved up, and you paid off a lot of your debt. Now you fall behind on your debt again, and this time you fall way behind because what if you end up being out of work for a year and a half, 2 years? We're headed for some pretty tough times, in my opinion. I would not want to play games like that. This is not the time to be sitting on the sidelines. If you have an opportunity to get back working, I highly recommend that you try to do that now, because I think we're looking at some rough road ahead. And again, that scenario of competing with tons and tons, I mean, historic amounts of people looking for jobs, right? Um, just be careful, guys. Be smart about how you're spending your money. And whatever you're doing, make sure that your plans are looking forward to the next 4 years, right? Plan some kind of safety net, some kind of, um, you know, I guess think in terms of if things are really, really bad for 4 years straight or more, what are the things that I need to do now to make sure that I can weather those tough times, right? Think about that kind of stuff now. Take action now, right? Because the longer you wait, the deeper you get into where we're possibly headed, the worse it's going to get, the more challenging it's going to get, and you don't want to go there. All right, guys? Be smart. All right, on that note, I got stuff to do. It's raining, it's Sunday. Arrivederci. Ciao. Until the next episode, enjoy the video, click on the like button, subscribe, And comment below. Let me know what your thoughts are, what you're doing, what your investment strategy is. And I will see you soon. I'm working on some more content. I have a series of videos that I'm working on, and you will be seeing those shortly. But bye for now. Bye.